Good afternoon, everyone. It's Chris from Solstice ATR. I want to wish everybody happy Labor Weekend. Enjoy the long weekend. Monday is off. Pay attention to Tuesday's reaction in the market. If we look above or not, you can find us on Solstice ATR, Axel, Twitter, Instagram, as well as Discord. Remember, this is for educational use, this video, and we trade side market, up market, as well as down market. From swing trades to day trades to anything that's swing. It can be from 3 days all the way to a couple of weeks or month. So as a day trader, you can trade either or. Remember to check us out. Hit the subscribe on the YouTube. It's for free. Share it with your friends and let us know what you think and give us your commentary. Let's go to the first slide up here. I have historical drawdowns in the stock market. Why am I saying it? We're coming to the end of August. We are going into September, October, November, and December till end of the year before the election. Every time we had a drawdown, I just went to the 2007, but I'll show you from the 1900s, the SPX. So I took the 2007 high in October till November of 2009. It had 18 bars. Each bar represent 1 month. The result of the drawdown was 56.96. The 2020, we had only 2 months. Each bar represent 1 month. So we had 2 months here. And the drawdown was 35%. This one we had Q&E. Here they pumped more money into the market, stabilized it by 2020 in December. We rallied and cleared the February 19th high in 2020. And we continued higher. But in 2022, the drawdown on the S&P from the November till the October of 2022, we had a drawdown of 27.54 and it had 10 bars. That means 10-month drawdown. Are we coming after on this monthly? We had a reversal after the Japanese crisis that we had overseas, the banking, as well as the crypto, Bitcoin, and Ethereum. We had a push down as well as interest rates. Then we had a wick straight up, coming back up automatically to the highs. Do we break the annual high on the S&P or not? We remember we are far away from the 18 SMA. You can see whenever we run away from the 18 SMA for a long period of time, we are on a high slope. That 18 SMA is so far away from the candle on the monthly bar. Do we come back and retest it, or at least 50% between the 5 simple moving average and the 18 coming back to the drawdown of the last month's low? So let's pay attention to it. Let's go to the weekly chart. In here, I showed the February 19 COVID, the drawdown of 35.4 to the bottom of March 23rd. Here, similarly, I showed the drawdown from the November high of 2020 to the low of October 2022. That was a 27.54, and you can see how far we are, starting to run away from the 50 SMA. We retested between the 18 and the 50 on the weekly chart, the average of the two, and we came back to the 52.19 and bounced off. Do we look above to the backside of this linear regression channel, come up and fall back in to that 5690, 5700, and go back down towards F3 and the mid-range between the 18 and the 50 simple moving average? That would be great opportunity. Remember, we got to pay attention to the Fortune 500 that represent 11 sectors. The Nasdaq represent 5 sectors. In the E-mini, you can trade the ES_F, or the Nasdaq NQ_F, or the SPY or QQQ. In relationship to the New York Composite, which represent most of the stocks in the exchange on New York Stock Exchange, it's NYA. Pay attention to that. The tech sector have been weaker in the XLK versus the Fear and Greed, which is the VIX, or you can use 2 standard or 3 standard. This is, using the UVXY or the VXX and so on. So make sure you understand this is for illustration use. You can use at your own risk and understand what I am trying to show you. And we are away from that uptrend channel, far away, and the 2 points from the October till the January low of these 2 points, and looking straight up, We are on a very high slope in a linear regression uptrend. Do we retest, look above and fail? Do we continue or do we fall back in? Pay attention to it. And here is the range on the overall range of the E-mini S&P 500. I put that because it doesn't have much VIPs. We've been range bound for the last 10 days. You can see we looked up, we came back down, we looked up, we consolidated, we looked down, we came back up, consolidated, and we looked back. We are inside this box. The value area high is the red line. The value area low is the low line. It's called volume profile, or you can use monkey bars. The point of control is in purple, and it is shown here, like the ranges here. The prior day range on Friday, it shows you where the previous day high is, the previous day low is, and Friday's high and Friday's low, previous day low, previous day high for Monday. Are we going to look above? Are we going to be inside the range, or do we fall below the range? And pay attention to the technicals using a 5 and an 18 simple moving average. The 18 is in red and green. The 5 simple moving average is in burnt orange and cyan. Remember, trade like a pilot. My niece is in the Navy. She's visiting San Diego. I put this and I said, trade like a pilot. You have to change your direction automatically. You have to be fluid, not flexible, because flexibility can break you. And make sure you understand the levels when you are trading, and do the retracements on a Fibonacci support and resistance. F5 is 50%. You do have a double deviation to the bottom. We do have double deviation to the top. Let's go to the next slide. Edge right now is bullish, but can the bulls turn into, and the bears come in and turn it into the volatility? And the Federal Reserve Board's talking about lowering interest rate. Is it a quarter? Is it 50 basis points? Usually when the Federal Reserve Board decreases interest rates, because they know they are trying to fight inflation, you have homes at high prices, the labor and unemployment is sitting about 4.5. We got the November election. I don't want anyone to be biased. Trade what you see on the chart, and make sure you pay attention. Take it day by day, week by week, month by month. If in case the trends do change, adjust your asset allocation, preserve your capital. Don't and don't assume things. Always look at the charts in front of you to know where the levels are in order not to be biased. The benefit of the Dow is still on the bull side. The tech sector, which is XLK, such as Amazon, Microsoft, Google, NVDA, keeping this market, be objective in your trading, because the sectors may rotate to small cap and mid cap. Pay attention to small cap IWM, RUT, or the micro 2K or RTY_F for the E-minis, and be objective with putting asset allocation at work. The most important thing, we are still taking clients for technical analysis, understanding risk, setting up platforms for them to understand how to use technicality, be able to trade correctly without being biased, and be objective about your money and preserve your capital in order to grow it. Last but not least, you can check us out on the website, get in contact with us, give us your commentary, and let us know what you think. And once again, check us out. And let's go to the first slide that I have up here. This is the Nasdaq 100. I have 5-year history, and I showed the COVID low, high, and the low in relationship to the October. I made a box between the low and the high. I took the October low. I created another box. We got the extension for last year's Fibonacci. We got the 61.8. We looked above and failed. On the daily chart, it's still weaker than Nasdaq. So let's take a look at it. It came back and retested the 50 simple moving average. If I zoom in here, you can see it tested the 50 simple moving and this linear regression uptrend, and we went back higher. These ovals I have in here are showing the gaps on the daily chart. So what I want to do, go to time frame. We're going to go custom instead of weekly. We're going to go to daily. We're going to go to 2020. Oops, sorry. We got to do it on the year, which is 2024, from beginning of the year, and go on looking at it that way. As you can see, After looking at the 61.8, we had this box here from the prior, 2020 highs and lows, and we took it and we extended it from October lows to the high. This was a 61.8 fib extension, which is 161%. We fell down. We filled all these on the way down. Whenever we fill a gap going up, I put it in white. I put these gaps down. This is filled. This is never filled because between here and here, there's a gap in here. So this is empty space coming back down to this area. And you can see that the Nasdaq is flagging up. What about if it goes up, gives you that double top or gets a lower high, then continues lower? Because what I can do is get a line, take the high point, which is a control point or the signal alert, to this lower high. This is my line. And what I want to do, make it in purple, edit the property. We're going to make this in purple. Let's go make it in purple. We'll use like a dark purple. We can push OK. We're going to make it into 2. We're going to keep an eye on that downtrend. Do we look into it and fail, or do we break up and go all the way up to this channel and come back down? The Nasdaq is a little bit weaker than the S&P 500. Let's go to the S&P right now. SPX. What I wanted to do in the SPX, show you that we were range bound in the last 10 days. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I had almost a triple bottom here on the breakout. If I come back to this area, that would be great. If I look up and come back in, that's my resistance, and clear the 56.69, let's call it 70, and I look up and I fail, that would be a good opportunity coming back to this level. If it holds, it's great. If it doesn't, I'm looking for this gap in here, which we can get an oval. We can put it in cyan color. This is one gap. There's a tiny little one right in here. Okay, everyone, I'm going to show it, edit the property. We're going to extend it to the right 2, 3 times and extend it to the left 2, 3 times so everybody can see there's a little gap in here. Then in here, there's another gap between this one and this candle here. If I take it all the way to here, you can see that this gap is right here on the candle because we never filled it. It's usually over time, the gaps usually do fill. And I do have one right in here, which I marked. I know it sounds wicked, but you can see that between this area and this area, there's a tiny little gap from the February 1st and February 2nd on the charts that most people won't even think that there is one. So I showed you the minimum one. This is a large gap, which we're supposed to have retested, never filled that gap. We rallied back up. We got 1, 2, 3 major ones and one small one down here. Even coming back to the 200 SMA, the 61.8, or even coming to the 38.2 and 50, that is a healthy reset, because if you take the high to this low, and what I want to do is show you how to read it. We take the line from the peak, which is the control point or the signal alert, to this low or a pivot. We had a 9.67% decline. You can see it on the chart. And if I take the bottom all the way up to this candle, we had a 10.4%. And if I take it to this candle, it's a 10.39. If I do look above, and I look above this one right here, does that mean I'm going to look above and fail, or are we going to continue? We are grinding sideways. We've been range bound in the last 10 days. Anything is possible. Pay attention to what September brings us before the election in November. So that's the SPX. And what I wanted to show XL in the tech sector, you can see we looked up, we failed. We haven't filled 100% of this gap. I have to adjust it. I left this blank here. We do have one down here as well. And this one was filled. You can see between here and here, this candle filled it. I didn't put any of the other ones up. So XLK in the tech sector, if I draw a downtrend channel, we are in a downtrend, and we can do this purple as well. So you can pay attention to the XLK in relationship to the overall market. I'm trying to cover. Let's do it purple. Okay, everyone. And we're going to do it dash lines. We have to pay attention if it's going to break above or completely come to it and reject. We are between the 18 simple moving average, you can see it, and between the 50. even if I look up and come back down, this is going to give us weakness. I'm not suggesting that the market is weak. We're going to pay attention to the S&P and Nasdaq because they will work together when they push up and they come back down. There's a little bit of divergence, and you can see that the RSI from this peak to this peak to this, lower highs, we are trending in a downtrend. So what I'm paying attention, there's two of them here, and you can do this one here. In case this breaks up, comes up to this one and fails, that would be great. If we touch this line and come back down, the RSI has an 80-20 range, but what did I do to what? I put it at 23. I'm just going to show it. I put it 23 and 78%. I put 61 and 38 to give us an idea how to look at the overall market without being biased, and that will help you to see the trend if it's uptrending or downtrending without being biased. So it helps you. You can use a CCI, MACD, a stochastic, whatever makes it simpler for you, and use a 250, 200 SMA, 116, 50, and 18 to keep you in trend. Whenever the 18 and 50 cross from the bottom, this is a bullish cross. Whenever the 18 crosses below the 50, that's a bearish cross. So let's go now. Take a look at RSP, which is the overall S&P equal weighted. You can see it created a new high in the S&P 500 equal weighted. I'm going to take a look at VEA, which is the developed markets in the international from Vanguard. We can see it's at an annual high, but what I want to do is make sure that people understand we are a little bit overvalued. It doesn't mean that we cannot continue higher, but we can retrace back and pay attention to these. And I want to look at the SLM. I usually don't talk about it. They don't have it here. This may be because of the, fee that we get platform, which is okay. And what I'm going to do is take a look at bkln. BK is the senior loans for corporations. We can see that the interest rates, every time it goes up and down, it lifts and resets every month. Lifts, resets. We are peaking. Pay attention to interest rates if they're going to be pushed down for businesses and stuff. When we fell down because due to the prior month, because they're talking about lowering down interest rates and stuff, we got to spike back up. And you can tell from the TBT where the TBT where the interest rates are, and you can see that they're starting to peak. And I'm paying attention. If we end up coming to this area and getting a rejection, that means rates will go down and bonds will go back up to from the par value. So these are the things I want to do. And what I want to do is go to the E-mini, and I'm going to show you how to do the measured move. Instead of the ES, we're going to use micro ES in the S&P 500. You can see where the daily are. And what I wanted to do is just go over all the sectors. You can see when we rebounded back up, we shifted back to the 60 high, and we fell back down, and we closed where? At the 56 area, which the high target was 56.59. We looked up there, but we failed a little bit, and the low target was 55.99. Where did we go down to? To the S&P 500, we went to 55.94. After we cleared the 98.53.06, we rallied back up. We had a good strength in the market. Does this mean we look to clear the 57.21? Look above and fail coming in? Pay attention, because we have this gap here, we have this gap in here, we have this gap down here, and we do have another gap down here that I'm not marked on the E-minis. So what I'm going to do is go to a time frame. We're going to go intraday. We're going to use 10 days range to show you how to do this. And we're going to do this on an hourly chart so everyone can see it, or 2 hours or 4 hours. It doesn't matter which way you do it, or 6 hours. What I wanted to do on the E-mini, this has the overnight taken off. I'm going to go in the style. In this setting, there's what they call the futures. What you want to do is highlight the overnight and check market to go gray on day, because if I don't check market, it's going to show you the overall. But if I want to see the European Asia market before our market opens up, it's going to show me where the gaps are in relationship to the low. You can see this low here. This is the close. If I take this to here, there's a gap. If I take it from here to here, there's a portion gap in here. to the upside. So what are my last 5 days? We've been range bound. This is my prior high. This is my prior low from the 2 weeks ago. So what I want to do, take this week's high to this week's high, which was Monday, because it looks like a double top. You can see it. This was my low for the week. So I'm going to go get the measured move. And what I do in the measured move, I'm going to go grab it, take the high for the week, take the low for the week. I'm going to extend it to the right 15 days. Edit the property. You can see it shows me the 26 and 28. So I can go as far as I want to the left. And what I want to do, go to the 10th so everyone can see where the levels are to 828. So this is it. And what I want to do is show, because we've been ranged in this box, what I'm going to do, go in here, instead of 10 days, I want to show 30 days range in the profile. So since we have been range in this area, do we look above to the 23, 50, or the 80%, look up and come back through, or do we look at the 23%, 20%, 38% and fall back in? So pay attention, because we are in this range and the tech sector has been weaker. Do we fall through the 50% coming back to this area where the breakout was, or do we fall 100% to the backside of the 200 SMA, the 50, and the 80% minus 80% minus 100, where you get support and a bounce back? So we're going to trade what we see. And you can see that on the Nasdaq 100 Mega 8, you can see Nasdaq Mega 8. The reason why I use the Nasdaq Mega 8, I've added Netflix in there. Most people are using the Mega 7. So it represents Apple, represent Amazon, it represent Alphabet, Google, and Google, which is, the preferred and non-preferred, ABC, Facebook, which is Meta, Microsoft. I kept it here as Facebook, so people, when they go, oh, Meta, what is it? Okay, Microsoft. Netflix is at an annual high. NVDA has kept the market up. Does NVDA give up? TSM give up? AMD give up? And Tesla as well. So the most important thing, we're going to trade what we see, not what we think. And last but not least, I'm going to show you 2K small cap range for the week. You can see that the 5-day range has been in this area from Monday all the way to the lows. And what I want to do is get the same thing, the measuring tool, extend it to the bottom. And these are my extension. If I drag it to the left or right, do we look up? We are in a symmetrical triangle in the Russell 2000. Does it mean that it's going to continue higher, or the IWM? Pay attention to what the market offers you. Don't be used up. UM here to show it to you. It's in a similar situation. What I want to do now, go to the daily chart. We're going to go to the weekly. We're going to go daily. We're going to go 5 years. We're going to go to the weekly chart, and I want to finish up with the fear and greed. You can see we looked above. We're trying to break out of this area. You see, we looked above this, because this is the one that brought us down in November. You can see 11.8 all the way down to the October lows of 10.10 of 2022. The 2023 was range bound for. Then we eventually trying to look up. We fell down. We got support at the 200 SMA and the 50, and we broke out of the 18 on the weekly to the upside in small cap. Does this mean we continue? And you got to pay attention to the mid cap. Let's go to the VIX. And the reason why I wanted to put the VIX, to show you every time there is fear in the market. When the Japan market got hit a week ago, we got a big spike in the VIX. And I told everybody, hey, around $11, $12, $14, buy some, because I think we're coming to that slope and we got a breakout. We got rid of most of the position around the $38, $37 when we looked above and failed. So that was a good support at the 50, taking some profit. And you can see it fell back down. We are on compression on the weekly chart. Let's go to the daily. And what I want to show is on the daily, the VIX. You can see that big move up and coming back down. Once the RSI got too extended, it came back to reality and said, you know what? I'm coming here. What I'm looking at is the backside of this channel here, so everyone can see it. You see, I have this up to, oops, this is too too squished up because of these candles on this side. So what I want to show you is we're coming back to that bottom of that channel because we had this continuation trend. And if I draw a channel here, we are in a downtrend coming back to this area at the $12, $13. Pay attention if you're going to accumulate some little VIX in case something goes south in the market, so you can get that little push up in the market like last time we had here when I called it. And you can check it out on Twitter under Chrissy Farah, capital CHRISI, capital FARAH. And when I usually tweet in the morning, one tweet, say what the ranges are for the day and what I think it should be doing in the market. If I use the VXY or the VXX, this is the monthly. You can see that the spikes up here were dramatically high and we got dumped. If I go on a monthly or weekly chart, you can see that this slope is coming down and down and down. If I zoom in here, we are in a downtrend, but you can see that spike up and coming back to reality. I'm not saying to go double leverage or triple leverage, ETFs. You can use the VIX, that will help you, or the VXX here. I'll show you the VXX as well. Similar situation. If I go to the daily chart, we can see that the daily chart, let's go back down here. And what I wanted to show you is that spike up and the drop. So these opportunities are there for you when you're looking for an opportunity to buy in the VXX or UVXY or the VIX. Usually most people think that the VXX or the UVXY does a lot for you, but I want you to pay attention when there's fear and greed. Coming back to reality and getting a reset is usually a healthy thing in the market. Let's go take a look once again at the SPX. And this is the SPX on the annual chart. What I want to do is go to the 30-day, 6-hour, and pay attention to this gap here and this one down here in relationship to looking above and coming back in. This is the most important thing in trading. Trade what you see, not what you think. I hope this video was helpful. Take care, enjoy your weekend, and happy Labor Day.